Good morning, everybody, and welcome back to Money in the Law, my FM 101.3, with your host, Jay Marsden from the Marsden Law Group in downtown Holliston. I'm John Drohan from Main Effort Financial, also from downtown Holliston. We are joined once again by the Holliston Cable Access Television, Christian Bidet, the senior executive producer of our show. And we are also joined by...
covertly joined by.
He's not mic'd up today, but he's in the room and he's here.
Don't mind me.
It is the voice of my FM 101. I mean, if you've ever, even if you never listened to the station, as you're flipping through the dials, you've heard this guy's voice.
Oh my God, you are awash in memories when you hear this voice. You hear this voice.
You are everywhere on my FM.
The golden
101.3.
vocal cords.
Yeah,
Yep.
none other than Ray. Oh, Ray. Without a doubt, you are my radio hero, and have been for the past since we started.
How many radio people do you know?
I mean, I don't need to know anymore. I'm done. I'm done looking.
We used to know two, and one of them retired.
Yeah.
So now we know one.
That's right.
You win, Ray.
I think I've heard Tom talk on the radio maybe twice, but so really, you're the guy. You've taught us everything, anything substantial that we know.
Remember when we first came in here and Ray was like, "I got to deal with these two jamokes."
I was on more back then.
Yes, you were.
Oh, yeah,
yes.
you were the producer.
Yeah.
You produced. You sat there. You were on the show.
I drank the beer.
You drank
drank
the proverbial Kool-Aid.
You did drink the Kool-Aid. God, I missed the Kool-Aid.
All right, well, you didn't miss it last week.
No,
All right, so here we are on Money in the Law, which just to review for everybody, we are a show that talks about things that have to do with money and has to do with legal questions you may have, but we do it in such a way where even people like Jay and I can even understand. So we try
we can get it. That's right.
Anybody can.
That's right.
So
There's hope for all of us.
That's right. So we'll talk about things that maybe you had a question about, maybe you never had the courage to ask anybody, maybe you just didn't think to ask anybody, but it's always kind of in the back of your mind. Say, how does this work? Or you hear something about some retirement thing or about some estate planning thing. Guess what? Your answers are right here.
Right here. Look no further. Listen no further, as they say.
Yeah, and if you're on Cable Access TV, you're looking no further either. And Cable Access TV is also seeing you are actually see Ray right now in the picture. So for those of you who have forgotten what Ray looks like, he is that dashing young man
Debonair.
standing sitting right in front of Jay and I. All right, so how are you doing today?
I'm doing very well. Not as well as I was doing last week.
St. Patrick's Day, for those of you who missed the St. Patrick's Day show. Was
always an adventure.
It was an epic St. Patrick's Day show, but we are moving on, and we're now on the. We're back to work.
We are back to work. Games, stop playing around.
Back to work. We got a lot of
getting real.
We have a lot of things to cover as we're neck deep in the middle of tax season right now.
And just for those of you who love, we maybe want to talk about this in the show a little bit. But for those of you who love tax season, it's actually a little longer this year.
Yeah. There was a little just like a kind of gifted extension,
There's that much excitement.
Not just your traditional extension of your taxes, where you can always extend to file your taxes. However, you cannot extend to pay your taxes. Should you have an outstanding tax bill.
Yep.
But this year that's been kicked out. It's been kicked out to May 15th, right?
Yep. Yep. Now I will say kicked out to May 15th. And you know what's unique when you're a Bostonian? What's unique is every year there was always that discussion. I don't know if you ever ran into this, but we used to run into this when I worked for that small mutual fund company in town. There was always a question. We used to call it the sort of the Patriots' Day exception. Yeah. Because remember, Boston, in true provincial Boston fashion, has lots of holidays that only Boston celebrates. Right. Patriots' Day being one of them, right? For all the obvious reasons. Yep. And so every year people would say there's an extension, right? And you say, well, yeah, it's like a day. I mean,
it's because it has to do with the marathon. It has to do with the
home
federal
Red
holiday.
Sox game. When are they mailing stuff? When are they picking stuff up? And so we would approach it the same way that we would approach our gifting strategy, which is if you're asking whether or not you should be mailing your taxes on Sunday or Monday, we think you're probably not prepared. Yeah. There's probably something there. So this year it's a month. This year for everybody, not just Bostonians, it's a month.
Which translates to people. I mean, think about it. Like people who are like, who are notoriously late for their taxes anyway, or you
Sign-
know, like
right here.
like
Guilty
at
as charged.
like the last minute running to
Yep.
to the post office.
Apologies, Al.
Nothing changes. Nothing's going to change other than the fact that you're the accountants, right? The guys, the Al Adavasios of the world, they're just going to do this a month later.
And when you got the email that basically said, "Oh, and just because we have to do this to be good
'cause-
accountants, right?
right.
We have to let everybody know that there's been a slight change in the tax deadline."
You know they didn't want to send that.
You could feel the bitterness just
Right.
reading the email. Like,
Adavasios changing his flight plans,
oh,
right? Yeah,
like those poor guys. I mean, April 16th, they are off the grid,
yeah.
right? And now this year, they're going to have hang around for one more month.
It's funny. Like I always feel like that accountants are off the grid pretty much all year long, right?
No, they're not. No, they're not. They're not. Those guys work. Those guys.
No, I'm not saying they're not working. I'm just saying they're off the grid like when you need them. Like so, right? Because it's like, hey, if you try and call an accountant, say like right in the beginning of the year, like, hey, I want to get some stuff done. Like, oh yeah, hey, you know what? I'm neck deep in stuff. I'm getting stuff that tax season has begun, right?
Yeah,
it's always like there's like taxes, and then of course with last year that with all the extensions and there's extension season, right? And then, there's nonprofit season, and there's, and
It's corporate season.
there's like a 2-week window when your accountant, when they're not on vacation, and you can call them, and or the aggressive accountant will call you, and he'll be like, hey, maybe we should come in and talk, maybe talk some strategies, right? Those guys, but that's only going to last for about 2 weeks. Other than that, they're straight up.
But to your point, right? Like everybody goes, a lot of people go on quote on extension, which means you file with the IRS to say, I need more time to get my taxes done. And then they give you an automatic, no questions asked, 6-month extension.
Come back in 6 months.
Yep. So that gives you until September,
Yep.
October-ish, October 15th-ish, to get your taxes filed. Now, but to John's point, but you got to pay. It's not an extension to pay.
Yeah.
So if you owe the feds $20,000, they want a $20,000 check with your extension request. Some might ask, why bother?
Yeah.
There's a real, obviously that's the genesis of that whole discussion, which is, well, why don't you just get them done? Why bother? But remember, extension to file does not mean extension to pay.
All right. So the good news is there's an extension to pay and file this year. The sort of kind of bad news for our accountant friends is it's only a month.
Yep.
For all of you out there, you got another, you got a couple 4 more weeks to get your stuff to squared away, and make sure maybe you get a little more time to dot your I's, cross your T's. Maybe there's another deduction that you've missed, or you and your accountant missed. So
sharpen that pencil. Maybe get another one.
You know what? maybe get 2. Maybe get an eraser. But at the end of the day, we have this conversation all the time. You got to pay your taxes. Just pay them. Just pay your, people complain, oh, taxes this and taxes. I mean, no one likes paying taxes. No one enjoys that.
You don't love paying taxes?
But it's, no, I don't. But I also, what I don't love is when people get like so wrapped around the axle and like, oh my God, I can't believe I got to.
I know.
My biggest thing is when people complain, I didn't get as big a tax return as I did last year. And I'm like, and I try and explain to them, there's a reason for that. And it's got nothing to do with it's got nothing to do with your tax preparer, right? They always credit their accountant.
So what's for our home audience? What's the top tax rate ballpark?
For it, the 36%.
Tax rate.
36%.
All right. So do you know what it was when Reagan came in and put across his gigantically massive tax plan?
Yeah.
Just remind everybody
51.
what it was.
Wasn't it?
No,
No, that's right. It was higher than that.
it was 75.
75.
The top tax rate was 75%. And you know what it was when Kennedy was president? It was 94.
94.
That was the tax rate. The top federal tax rate was 94%.
Right, so that doesn't mean you're giving away 94% of your money.
No,
that's not how. That's the top tier, right? That you evolve into.
Yes, it's a whole. There's a whole formula. But my point is, to John's point, the tax code. Okay, the tax code giveth, the tax code taketh away. That's fine, but don't get caught up at tax time because, to your point, everyone's all sulky about, I just did my taxes and I had if you're writing a check to the feds because your taxes, that means you made some money.
Exactly.
right?
Yeah.
So I mean, that's that's
And that's what it is, right? So if you make money, you're going to pay taxes.
Yeah.
Right. And back to what people get stuck on is they think if I don't get as much of a return, then I'm getting ripped off by the government. All that means is that it's very simple. You make so much money that goes into the tax computing formula.
Oh, yeah.
And then it says this is how much tax that you owe.
Yep.
Right. So let's say you make $100,000, and let's say you owe $30,000 or $25,000 in taxes. Like when everything
Sure.
gets computed out, right?
Yeah, sure.
Throughout the year, let's say you're getting paid by through W-2, or let's say even if you're self-employed, you've been paying taxes all along, right?
Hopefully.
So
Yeah,
all
hopefully.
along, so you've been paying taxes all along. So when you at the end of the year, if you haven't paid 20, and this is what your accountant does. This is what the tax preparation does.
Sure.
It just figures out how much you should have paid throughout the course of the year. And if you haven't paid $25,000, then
right.
guess what? You're going to write a check until you get to that $25,000. And if you paid more than $25,000, then you're going to get a check back for everything that you paid minus $25,000. It's that simple.
Well, and that's the accountant's job, right? The accountant's job is to say how much should you have paid in taxes.
That's
Exactly.
what they
That's it.
figure out
That's
that
it.
number. They figure out this is what you owe. This is what you owe in taxes because there is a long, a great complicated formula. Not that complicated, but complicated enough.
It's a tax code. It's always complicated.
Yeah, yeah. I mean, who is it? Albert Einstein said that's the one thing that he couldn't figure out.
Yeah.
The one thing it was too hard. It's like I can't. I don't
Quantum
understand
physics,
this.
piece of cake.
Yeah.
Theoretical
Time travel?
Theoretical origins of the universe, not a problem.
Time travel, that
Yep.
tax code that goes
Mortgage-
to
mor-
bookworms.
Mortgage deduction, can't make it up. Can't figure it out. Can't figure it out. Right.
So yeah, so your accountant, that's what they do. They figure out exactly based on what the tax code is. They say, okay, here's what you did. Here's what you donated. Here's what you paid in interest. This and all this based on your income and based on how many people are in your family. All that is figured out, and it says at the end of the day, it goes into this black box and spits out the number. And this is what you owe, right? And if you haven't paid that much, then you're going to have to pay it.
And here, and the value. I mean, the value in my mind, the value of having somebody as a tax advisor, CPA, put whatever name on it you want to put on, tax attorney, put whatever you put on it.
Tax hack.
Is that their job is to understand exactly what you can take legitimately, legally, from a tax perspective, right? And again, to John's point, the goal is not that you pay more than your fair share. The goal is figure out the formula that talks about what you owe and let your tax person, your tax expert, your tax whatever you want to call them, let them come in and say to you, well, the tax code says you can do all of these things. These are all the things that you can deduct to get to the accurate amount of what you should pay in taxes. And it's not a back of the napkin thing. It's a convoluted formula, but let's come up with that number, right? And that's what the tax person does. And if there's things that you can take legitimately, then they're going to tell you, you're going to take these deductions. You're going to take a standard deduction instead of itemizing a deduction. This one makes more sense for you rather than this one. So their job is just to extrapolate all those tax changes, of which there are many,
Yeah.
and of which, especially in this very fluid environment where there's all kinds of things changing.
And it changes all right. Like you
Yes.
said, all the time.
Yes, but I think, and I've said this on the show before, as a bad delegator and as a reluctant delegator, farming out my taxes was probably the first thing I finally screamed uncle on and said, it's time to give this project.
I wish you were my client because I would have told you not to, just to watch you sweat it out. Yeah,
It's
you
time
should do
to
your
just give
do your
you.
taxes.
It's time to
Do
just
'em late.
give this project to somebody else, and it has been one of the best things I ever did.
One of the best. Yeah.
One of the best. One of the best. Doing the show,
Starting the
hiring a
show.
tax person, marrying my wife, right?
Right.
Not
Yeah,
in
checking the
not in
book.
any particular
I was
order. I'll
gonna
let you
say.
guys figure out the order, right?
I was going to say the show's important. However,
That's right. Marrying my wife and marrying my tax person, they're both equally important in my life. I have an equal amount of affection for both of them, and they both
for
bring
those of
me.
you that married accountants, then now you've
Double
got
down.
two birds in one stone.
God bless you. God bless you. But it truly is one of those things that you say to yourself, this can get complicated, and certainly there are situations where it's very simple. Not a lot of moving parts. I get that.
Yeah,
I understand that.
And on the on the part of the and the other thing is, a lot of people will, they'll complain about their accountant. Well, my accountant doesn't find it. He's not aggressive, or she's not aggressive enough. She doesn't find, and some of that is on the accountant. If they don't ask the right questions, but it's also, at the end of the day, they're your taxes.
Well, but you bring up a great point. That's the thing.
Yeah.
Like an aggressive investment advisor. Being a tax person, there's more aggressive and there's more conservative tax people. Some tax people would say, absolutely, you're going to take that as a deduction. It absolutely makes sense for you. And other people are going to hem and haw and say, oh, I'm not sure. So yeah, you pick somebody you're comfortable with.
Or they're going to say, you probably can't. I mean, if they come and audit you, you're going to have a tough time justifying the fact that you used your hot tub as your home office and deducting some of the cost of that.
Not now with Zoom. I think now it's a lot more. I think it's a lot more accepted.
Right.
As
long as you have your shirt on, as long as you have some sort of a
t-shirt some type
on.
of wicking, not a cotton. It's got to be like a wicking, something that stays dry, like above the water line. Maybe some type of
keep it above the water line.
Yeah, that's exactly right. That's exactly right. A bubble-free zone, please. Thank you very much.
Yeah. So put some extra bubble bath.
That's
in
right.
Your hot
That's
tub.
right. So it's tax time. Do your tax people a favor and get your stuff in. Get your stuff into them. Get your numbers squared up. You're going to make some phone calls. You're going to figure out how much you paid in property taxes last year. Do all that work. Let them do their thing so that they get, even though they get the extension, they don't have to work right up to the extension.
And one of the things that you brought up, which is at the end of the day, this is the bottom line. The bottom line is, if you make money, you're going to pay taxes, right? And so, because of the tax code and because of the ever evolving or the fluent tax code, oftentimes, as your income increases, you may not be able to take the same kind of deductions that you were able to take in years past, because you make too much money.
Yep.
And oftentimes that's a thing where someone's like, oh, I can't believe that I feel like I'm paying so much more in taxes. And the fact of the matter is, you are paying more in taxes, and the reason is because you're at that point where you can't take some deductions that you otherwise would have been able to take, because of a change in the tax code, or because you incomed out of being able to take those certain deductions. So even more important, as you start to, as if things are going good and you're making money and that's why it's even more important to talk to your accountant, because the accountants are the ones who are going to be able to figure this stuff out, but they'll be able to figure it out much earlier than April 10th, or like right before you're supposed to file. So in other words, there's a lot of ways to reduce your taxable income, right? Let's say you can contribute to a health savings plan, you can contribute to a retirement plan. If you can afford to do those things, that's going to lower your taxable income.
Well, in a lot of cases, not to cut you off, but I want to make sure people understand this.
Not to cut me off.
What the tax person is going to say to you is, look, there are things that you can do with your money rather than pay taxes with that money, right? Because the tax code will let you do these things, and then it will help you on your taxes. I'm sorry, go ahead.
No. You're absolutely right. And they're going to say, here's what your options are, and you may say, I can't afford to do that. I can't afford to donate $10,000 to a charity, because I don't have $10,000 to donate. I need that for my kid, or I need it for to buy my groceries or things like that. But it's important to kind of to know these things, right, and understand them. So there is some time. There's some time right now, before you have to file. And again, with the extension, you have a little bit more time. So there may be some things that you can do that you still have time to be able to do.
I think it's important to understand the concept that John's kind of highlighting here, which is the idea that you may, for example, you may not be planning on putting money into a SEP IRA, for example, this year as a self-employed individual. Right? Why you're not doing that, we have no idea. But let's assume you
may not be able to afford it.
You weren't going to do it.
Yeah.
So then what's going to happen is your tax person is going to say to you, well, here's what we can do. You're going to pay, $10,000 in taxes this year. But if you put $10,000 into a SEP IRA, your tax bill is only going to be X amount of dollars, right? So what they're going to do is they're going to highlight for you the fact that the way the tax code is written, the government may be paying some portion of that contribution to your SEP IRA. And so this is what a good tax person is going to kind of walk you through these things and say, for all of these things that you do, retirement contributions, charitable contributions, health savings account contributions, some of that money that you're going to be putting into those things, while it seems on the front end challenging and sort of financially, can cause you some, kind of a cash crunch, you're going to be playing with the house's money on some of this stuff. And some of that money would be money that you have two choices. You can either put it in your health savings account or write it to the government. What would you rather do?
Right.
You want to keep it. It's your money, right? If they're going to let
If
you
you
keep
can,
it,
sure.
if you can do it, do that. So again, this is where I really like the idea of when you go through the tax process with somebody who understands the tax code and understands your situation, they can guide you through all this. So that's a tax strategy, and that's a lot different than just saying, oh, I'm checking a box here, I'm checking a box here, and I'm doing all the things that are in a little bit of a silo, and there's nobody who has my big picture at heart, right? And that's where I think it makes a big difference for you, and that's where you really, I think that's really where you make some savings.
Yeah, you certainly could. But at the end of the day, there's only so much you're going to be able to do, right? At the end of the day, there's going to be.
You can't make it all go away, sure.
Exactly. At the end of the day, there's some people can for some reason, and it seems to be like these extraordinarily wealthy people can get away with not paying tax or really reducing their tax. But that's
wealthy people,
political
appointees,
that's another
political people
another
in general. That's another show.
So at the end of the day, you're going to have to pay something, and especially if you made money. And the government isn't interested in having you to pay more than you're supposed to pay. The government doesn't work like that.
They would like it if you did, but
they're
not going to force you to do it.
They don't care. It's almost like they're like an indifferent. Think of them as just like kind of an indifferent machine. They're like, if you pay too much taxes, we're going to give you some of the money back. And oftentimes people get tax bills, right? You'll get a tax notice in the mail saying, oh, you didn't pay enough taxes 2 years ago. You need to pay more taxes. And you're like, well, wait a minute. You go to your accountant, you go to your financial planner, you say, well, why am I getting this? Say, oh, this number was incorrect, blah, blah. So maybe you have to refile, you have to do something, and then that could get justified. And the government will be like, okay, oh, sorry, we were wrong. And that's it. Like, they don't care, but they'll do that. But that's the thing is that the government's all the government is we collect tax money. We need money in order to run this big giant machine. You pay taxes. You owe X amount of dollars. This is what we collect from you.
So let's take a break, and then we'll come back, and then we'll have the answer to this very important quiz. The government allows you to A, avoid taxes, B, evade taxes.
Evade, yeah.
We'll come back with the answer to that quiz right after the break.
Avoid
and we'll
versus
talk some more
evade.
taxes.
All right, we'll see everybody in.
Write your answer down.
All right, we'll be right back.
And we're back. Money in the Law, My FM 101.3. Jay Marsden with the Marsden Law Group. John Drohan, Main Effort Financial. Christian, steering us through the cosmos here. We are talking, because we're getting close, we're talking taxes. We had a little extension this year. That doesn't mean that we'll do two of these. We'll just still do one. But we're talking about taxes. We're talking about getting filed. We're talking about not following your obligation as a good old red-blooded American tax-paying citizen.
And we asked the question: does the government allow you to A, avoid paying paying taxes, or B, evade paying taxes?
What do you think the answer is?
I don't know. I mean, the evasion, any type of evasion with respect to the government, just seems like it doesn't sound right. It doesn't give me that. It doesn't give me that warm and fuzzy feeling. So I would choose
It's the type of
A.
stuff that sounds like it would end up in an indictment.
Yeah.
Yep. That's right. That's right.
That's evade. That's a court word.
That's
right.
So the answer is yes. Obviously, you can avoid creating a taxable situation for yourself, right? So, for example, you want to sell a stock in your portfolio, and it's December 15th, and you want to sell it, but you want to wait until next year to sell it so that you avoid paying any taxes this year. Perfectly fine.
You sure can.
Nobody has a problem with that. Everything's wonderful. Selling the stock and then not reporting it to the IRS, or making gains on a particular transaction and not reporting it to the IRS so that you evade paying taxes on that transaction, frowned upon at the IRS.
Frowned upon at the IRS, and oftentimes the IRS will find out about that.
They do. They have a way.
Yeah.
They have a way. I don't know how they do it. They have a way. Yep, they have a way.
They find out about it, and they don't find out about it right away. I mean, oftentimes, oftentimes, and that's the beauty of the IRS, is they can find out about something that happened several years back, and then when that's well past anything that you're thinking about anymore, they'll come back, and we talked about this earlier before. They'll send you. A lot of people get a tax letter, right?
Oh, yeah.
You get the tax letter to say, Oh, well, hold on a second there. And you know these letters. Like when you get it, the IRS letters, when you get that mail, and that's different than other
Yeah.
mail.
Yeah.
And it's funny because these mass mailings, some of these guys have figured it out. They make their mass mailings look a whole lot like an IRS letter.
Oh yeah.
So they'll
'Cause
say,
so you'll open it.
they'll say, whoa. So yeah, these IRS letters, you get one of those. And normally what it is, it's that the IRS is contacting you and saying, you need to pay, you didn't pay enough taxes, let's say in 2018 or 2017. And here's what we came up with. Here's what you did. And there's a discrepancy. And oh, by the way, this is the number that you owe. The other thing is this. Oh, by the way, this is the number that you owed back in 2017. It is now 2021. And so what we have applied is the standard interest rate that has accumulated over time for not paying this at the time you're supposed to pay.
Are you suggesting that if you don't pay your taxes, that the government actually makes you pay it back with interest?
Yeah, they do.
Ooh,
That's
ooh,
how they do it.
Yep,
And
yep.
because the government understands how money works. I mean, believe it or not,
Oh.
the government. Yeah, there's.
They do some things really well.
They do. They understand how money works because oftentimes there are other parts of the government that actually they tell you how money is
Yep,
going to work.
that's right, that's
they
right.
tell you what the interest rate's going to be. So when you do get one of these tax bills, a lot of times they're scary because you'll get it and you'll say you owe $10,000 in taxes, and you're like, what the? Where did that come from? So
And by the way, they do make mistakes. Like to be. I mean, it's not getting one of those letters doesn't mean like, oh my God, they're going to cut me off to jail, right? They may legitimately have made an error. So you're given the opportunity, I guess.
that's what it is. That's what the letter's for.
To kind of cut. It's not like, oh my God, drop this check in the mail right this second. And they'll tell you right in the letter. If you disagree with now, to John's point, you're going to get the letter. The letter comes with like certain certain timelines and certain deadlines that you have to meet.
Read this letter.
Right? That's right. Read the letter. Don't like put it with
This isn't one of those. Yeah.
don't put it with your Vineyard Vines catalog and say, I'll get to it when the weather gets nice. Because the letter's going to have certain
Wait a
deadlines.
minute. If it was with your Vineyard Vines catalog,
Oh, yeah.
you'd read it 3 times a night.
Yeah, that's me. Yep. So when you get it, pay attention to it because it's going to tell you like if you disagree with this, this is what to do if you disagree with this, and if you agree with it, then you just pay them. That's fine.
Well, here's the thing. There's something happened, right? And like I said, oftentimes it's several years back, so you probably don't remember off the top of your head. Now, if you know for a fact that you did something and you just said, "Oh, I'll see if the government figures it out," then you know, right? Then it's something that you're aware of. But I would say virtually in all of our experience in our practice, when clients get these tax letters that have anything to do with our investments,
Sure.
it's because there was some sort of a cost basis that wasn't reported properly,
Yep.
right? So essentially what happens is let's say you own a particular stock, and let's say you bought that stock at $20 a share and you sold it at $25 a share. And that happened in a particular tax year. So you have a $5 per share gain a capital gain that you're accountable for.
Sure.
That you're going to pay taxes on that capital gain. Oftentimes what happens is when the stock sells and it gets reported to the IRS, there's no evidence or there's no reported cost basis that you bought at what price you bought the stock at.
Right.
So all they know is that you sold a stock that was worth $25 a share. So what the IRS does and what the government does is, and this is somewhat to their credits because sometimes people do end up not researching and doing and figuring it out and they just pay it. But what they do is they say, oh, we don't have any report of this cost of your cost basis. So to us, you got that stock at $0.
They assume that you
and you sold it at $25. So instead of having a $5 per share gain, which you pay taxes on, you have a $25 per share gain, which you pay taxes on, which is much greater, right?
Right.
Which is why when you paid your taxes, when you filed your taxes back in 2017, when this happened, you were doing it based on your own cost basis. You weren't saying this is because I.
Well, you did your own accounting, right? And remember, I mean, years ago this was very, very difficult, right?
Yeah.
So for those of you who have a little time in the saddle on this, years ago they didn't track your cost basis, right? Companies didn't keep your cost basis. I mean, when they started sort of adding this, into your accounts, you probably know it from your time in the industry. I know from my time in the industry. This was earth-shattering because prior to this,
You had to figure it out
You had
yourself.
to keep all your own records.
Yeah.
So you had to say to the government, I paid 20 for this, I sold it for 25. Here's the paperwork that sort of supports that argument. I mean, it was ridiculous. Now,
It's not so bad.
all the
With all-
companies
with those-
track
those
for the
crazy
most part.
computers, yeah.
And if they don't track it, if you know what it is, you can give it to the company so that it will then be tracked, going forward. So if you inherited some property, you didn't know what your cost basis was on this, and this is all about matching up paperwork, right? Because you get all your tax documents, and guess who else gets your tax documents? The government. The government gets them. Those
IRS.
companies report all that stuff to the government, and then the government says, "Do these match up?" And when they don't match up, you get a letter.
Yep.
That's what happens.
Yeah,
That's
and,
what happens.
and so if that's the case, then all it's really going to take is some administrative work to figure out what that cost basis is to get the numbers correct.
Sure.
And then so oftentimes what happens is let's say that your tax letter says you owe $5,000. Oftentimes you may owe a little bit of money, but you don't owe $5,000.
Maybe. Who knows? Yeah, who
Again,
knows?
if it's one of these cost basis things, and normally that's what happens. That's the most common thing that we've seen.
And the best, I took a bunch of tax classes when I was in law school. I took a bunch of classes when I was taking classes at BU for the financial planning thing. And one of the best pieces of advice I ever got in a tax class was this wonderful, wonderful tax attorney who said, look, at the end of the day, he made it as simple as possible because the government just wants money.
Yeah.
The IRS just wants money. And this sounds ridiculous, but when you sort of internalize that concept and say, wait a minute, so it's just about the money, right? All they want is money.
Yeah.
That's it. Once you know that, right? It kind of the intimidation factor. Not that it goes away, because if they want a lot of money, it can be really intimidating. But
when they start taking your money out of your bank account. 'Cause
yeah, they
can,
start taking stuff. But I mean, but at the end of the day, that's all the government wants is money. And so
It's a business.
It's a business, and you owe X amount of dollars. And he used to say to us, he'd go to the IRS audits on behalf of clients all the time, and he'd say to his clients, when he went to because the clients would always want to go to the audit with him.
Yeah.
And so the first thing he'd say is, absolutely not. You are not coming to the audit with me.
Better if you stay outside.
I'm going to keep you here because you're going to get chatty and you're going to start talking about a whole bunch of stuff that I don't want you to talk about. So I will go to the audit on your behalf, and you will write a check.
Yeah.
And then the clients will go, and start screaming on. He goes, no. This is how it works. I go to the audit, and then you're going to write a check. Now my job, this was him speaking now, my job is to make that check as small as I can make that check. But
Guess what?
but make no mistake about it.
You're writing a check.
You are writing a check. And I don't know what that number is going to be, and I'll know a lot more, after we get into this. But this is what's going to happen. And then his clients would sit kindly, I'm sure, idly at home, waiting
Stew
for
a little bit, right?
waiting for the excitement, the news when they come home.
Pacing back and forth.
And then he'd make a phone call and he'd say, all right, we went and we did our dance.
Here's what we know.
And here's what we showed them, and here's what they came back and showed us, and we had the meeting of the minds, and this is what you're going to write a check for.
And that's how it works.
And they'll work with you on some of this stuff, right? Again, the government just wants money, right? So to John's point from earlier, if you owe them money and you don't have the check to pay the government the money that you owe, they'll work something out with you.
They'll figure it out.
They'll work something out with you.
Yep.
They'll work a payment plan out for you. And if you're listening to the show and you're in that situation, there are people that you can go and speak to, right? There are professionals, and this is what they do every day,
Yeah.
all day, right? They will go in and they know, again, there's rules around this, just like there's rules around everything. How much do you owe? How many years do you owe it for? How long has that tax lien been hanging out there? There are people who know this, and they will go in and they will say, look, we'll take care of this for you. You'll pay them, right? So
You'll pay us to, yeah.
yeah, but they will go in and they will negotiate on your behalf, and they'll come back and they'll say, hey, we just did everything that you just talked about, and you wanted to get square with the IRS. This is how we do it.
Yeah.
You go, we worked out a payment plan, we worked out whatever you want to call the plan, we worked it out for you, and this is what you're going to do. You're going to write them a check pick a number, I don't know, $500 a month, $1,000 a month, $200 a month, I don't know, some number, right? They're going to want their money back, And you're going to pay interest
Or-
and penalties, just like you just talked
Yeah.
about. So you'll pay more than you ultimately do owe them. But you can always pay it off early. You can always throw money at the problem.
It's
But
a debt,
It's a
right?
debt. That's
Yeah.
exactly right. It's like paying off a credit card, except the credit card company can invade other countries, launch
And-
not launch nuclear missiles,
Take that money out of your bank account
and
without asking.
do whatever they want to do.
They
So
can.
yep. So it's a little
That's how it
different. But the point is, if you're behind on something like this, don't let it go.
Yeah.
The problem only gets worse.
Yeah, it won't get better. It
No,
won't get better.
no, they won't forget about you. Nope, it won't go away. You'll have to come up at some point. You'll have to come square with them, and it only gets more painful down the road. So
Right, because,
embrace it.
because and we've seen some of these extreme cases where, people just they ignore them. They ignore their
Yep.
tax letters. They
Yep.
ignore these IRS communications, and they ignore them for years and years and years. And what happens is, the government's, like I said, they're a big robot. There's no emotion involved in this.
Nope.
They're like, oh, they didn't pay. This is the interest that you owe on it
You
for
didn't
this year.
carry the one. This is it.
This is what happens. So often where this started out as something as a probably much less much lower percentage less of what it could evolve to, then it becomes a serious issue, because if you owe a lot of money to the IRS, granted you can go to these places and you could work out some sort of a deal, but if you have to pay $200 a month versus $2,000 a month, that's a different animal. That now you're talking about something that's going to be life changing, or even worse in our case, right? In our planning case, is like plan altering, right? Where you thought I was going to be able to keep my house, or I was going to be able to keep my summer house, or I was going to be able to pass on stuff to my kids. I was going to leave a legacy. There's not going to be anything to leave. You're going to leave a legacy of debt to your kids.
That's
because
they won't forget about it. First of all,
No.
they will ultimately put liens on your property. All right, we've had that happen for
Yeah.
clients where we've done that work, and they don't care. I mean, you go back to this idea of them not caring, right? So now remember, if you own a piece of property and you or your loved ones down the road are going to sell this piece of property, all the debt and all the obligations that are involved in that, those have to get paid, and they get paid out at the closing, if you will.
Yeah.
And I can tell you right now, it's bad enough to try to chase down, or it can be bad enough, just trying to chase down a couple of mortgage statements. But if you owe the feds money and they've put a lien on your property, and then in some cases, people will say, I'm not getting enough money from the sale to cover the lien that I owe
Yeah.
the
That
government
house
for.
There's the water, and my house is under it.
Yeah, and it's not on, and you're not in a beach community, and so that could be a challenge, and that's taxing, pun intended, because the IRS is going to they're going to sort of take a hard look at this and say, well, are we willing to take less?
Yeah.
Are we willing to take less for what's available? And there's a whole nother verification systems where somebody just and don't think to yourself, well, it won't become my problem, right? Because if you think, oh, it's not going to become my problem, it won't become your problem, but it will become the people you leave behind who have to unload this property, because even though you're gone, they still have to sell the property. Then they have to deal with the IRS instead of you dealing with the IRS, and they have to deal with the mortgage company instead of you dealing with the mortgage company.
It sounds so fun to do this. I'm telling you, and it really, nobody wants to do this. Is the definition of fun. I mean, you think Christmas morning is fun? This is way more
Well,
fun.
given the choice between going to the Cape for the weekend or working on somebody's underwater tax problem on a sale of a piece of
So
property
fun.
that, by the way, may have probably fallen into disrepair, because if you didn't have money to pay the taxes,
One would
you
think,
probably didn't.
yeah.
You're probably not doing a lot of maintenance and upkeep on the
Yeah.
property, and so then that becomes a
You're not going to
whole
get top dollar.
another animal. You might not get top dollar for your property. So these problems don't go away. They don't go away now, and they don't go away in probate, which is where this whole thing ends up, because somebody has to clean this up, right? So the tax thing, it can get away from you, and if you feel like it's getting away from you, sit down and talk to a professional and let them sort of give you the glide path to get out of
Yeah,
this.
and it may not be overnight. It may be something that's going to take a little time.
Oh, no. Yeah.
But it's something that you have to do it, because if you don't, it's gonna it's gonna become like consuming for you. And you hear these stories about people, they're so indebted. They're so kind of encompassed by all of these, like these tax problems or the IRS letters and all of this debt that they've accumulated. And who wants to live like that? Nobody does.
Well, I have a quick question for you for the break before the another quiz. Does bankruptcy solve some of these problems? We're going to go on the break.
And the answer is when we come. What a great teaser! All right, we'll be right back on My FM 101.3. Jay Marston, John Drohan, Christian Bidet from the Holliston Cable Access TV. Don't go anywhere. We will be right back.
And we're back. Money in the Law, My FM 101.3. Jay Marsden with the Marsden Law Group. John Drohan, Main Effort Financial. Christian at the helm.
I'm in my, for those of you in Radio Land, just so you know, I'm in my, this is my band manager outfit. So
I was going to say, you look very like hipster today.
Oh, yeah.
Like you're like a marketing executive
again, because of my hair and because I have kind of band manager hair at this point. Well, yeah.
Whatever.
I mean, an older, like kind of longer in the tooth band manager.
What band are we talking about?
I mean, I don't know.
We're talking about Perry Como? Who we talking about here?
We're talking about rock and roll bands. Like, I'm definitely a rock and roll band. Anyway, sure. This is my. I mean, what's the who's
boy band from the '80s? Go ahead.
Maybe, right? Because you know what they are. They're popular now.
Yes,
they're coming back.
Yeah,
bring them on back.
That's right. Right.
You know what our band is? The band that when you talk about boy bands, Phoebe is infatuated with One Direction. So, and in her mind, they're going to get back together.
She's hopeful.
When One Direction gets back together,
writing letters.
It will. I mean, writing letters, posting on like any kind of social media, please, like begging to get back together. She's a big Harry Styles fan.
All right, there you go. I'm not sure Harry's going back, but
whatever. I mean, and that's what
there's always one that breaks out. He's like, I don't need to work anymore.
That's what I tell her, right? That's what I tell her. I'm like, unfortunately, Harry, he's probably looking at those guys and like, I'm doing okay without all that baggage over there.
There's a reason Michael Jackson didn't jump back in to do some more of that Jackson 5 stuff. Every once in a while, he'd show up. It was nice. It was
great
nostalgic.
Great to get together, right?
Yeah, good to see the fam, but I'm out of here. See that gigantic limo out front? That's mine.
See you later.
Yeah, that's right. That's right.
And it happens, right? It just happens. Justin Timberlake, is in sync? What's going on with them?
I think JT's probably okay.
He's doing just fine.
I think he's just fine. Is right. I think he's doing all right.
All right. So this is the scare show. This is we're doing some scare tactics here, talking about some of the bad things that can happen.
Don't be afraid.
No. Because we're here to help.
I'll walk you through it.
Some of the bad things that can happen if you end up getting in a situation where you owe the IRS money. For whatever tax purposes, and then now in the last segment, we were talking about how if you don't necessarily address these issues, they can compile and compound into something that is
a gigantic index card
that'll make it worse, right? So, which takes us to the third part of our segment, which I think we're going to talk about one of your potential options, or one of the potential, I don't know, would call it a solution, but something that could maybe help you out in this situation, or maybe something that's inevitable, is filing for bankruptcy.
Yeah, that would be unfortunate for the whole host of reasons that we've been talking about today, which is that means obviously that things have gotten to a point where this is maybe the best chance for a reset.
Yeah, and it's not uncommon. It's far more common than people realize.
Sure.
People, in the old days think bankruptcy, it's, because everybody plays Monopoly, like the bankruptcy option means you're out of the game, right?
That's right.
If I'm filing for bankruptcy, I'm done, right? I'm out of money, and then I have to go jump off the Brooklyn Bridge.
Well, and in a post-COVID world, there's a lot of folks who ran a business that, for a whole host of reasons that we've been talking about through this entire pandemic, that the businesses just wasn't able to make the go of it that we had all hoped that they would have made. I mean, this has been, for certain sectors of the economy, this has been a tough, challenging time. And so this is potentially an option for people to look at.
Yeah, and it happens all the time because, especially with these business owners, is they'll sink everything they have, maybe into a property or into an idea, and they've invested all their money into this. And what happens is, if that business doesn't take off, or it doesn't produce what it's supposed to, they can't make ends meet. At the end of the day, that's it. And one of the things that you may have kind of hanging over your head is some money, back taxes that you owe to the IRS. And we talked, in the previous segment, we talked about, if you get a tax bill and then you would neglect it, it could compound. But you could have a tax bill, for last year, and
Sure.
something that
Yeah.
you knowingly didn't pay because you just didn't have the money.
That's right. That's right. It wasn't an unwillingness to pay. It truly just said, look, we don't have the cash flow to pay this.
Yeah.
And so the bankruptcy system, if you will, is an opportunity to either restructure your loans to come at some of these and try to pay off some of these obligations and sort of modify and reset some of these. And in some cases, the option is to just get the loans basically adjudicated to just have to not worry about them anymore. It's a reset opportunity. It's not, it's a chance for you to kind of go in and say, look, when things didn't go the way they wanted to go, I think I can handle some of these creditors, or I absolutely can't handle some.
And that's one of the things that people don't realize is they kind of think it's an all or nothing thing.
Right.
And there are different types of bankruptcy. There's Chapter 11, there's Chapter 13 bankruptcy. There's different levels of bankruptcy.
By the way, no, not a bankruptcy attorney. Took a bankruptcy class in law school, but we do not make any. We're making no representations that we're bankruptcy experts. That would be a referral to one of our business partners.
Yeah, and that's the thing.
But we know the concept.
And that's the thing for anybody who's considering filing for bankruptcy. You need to go to somebody who's a specialist in it, like without question. And we say the same thing because we get calls all the time, and I know enough about it.
Sure.
I've worked with, I've dealt with it before.
Filed?
Luckily, I haven't.
That's right.
No.
Yep.
But it's one of those things where, and I tell my clients, like, look, this is a very complicated process, and what happens on the other end, again, depending upon where you're at and what level of your financial situation is, what happens on the other end could be a significant. It could really be life changing.
This could be a real solution, and I think that's what we're suggesting is not. Don't see it as something to be avoided at all costs. It's something that at some point has to become part of the conversation.
Yeah, but it also was really important is that you have to understand what the costs are to do this.
Sure.
And that's where the bankruptcy specialist is going to be able to explain this. They're going to say, look, here, people think I'll never be able to. If I file for bankruptcy, will I ever be able to get a loan again?
Right. Yep.
And that's probably the biggest thing, right? And when we talk about a loan, we're talking about, will I ever be able to get a loan for a house,
for a car,
for a mortgage, for a car, for a student loan. If I want to, if I want to send my kids to school, kid, will I be able to co-sign on a loan? Like, there's always what is it going to do to my credit score? And there's like the whole borrowing capability. Bankruptcy affects that. Does it eliminate it? Not necessarily.
That's right.
But again, it all depends on your unique situation, and that's where the bankruptcy specialist is going to say, okay, here's what happens if you go this level of bankruptcy of this, you do a Chapter 11 versus a Chapter 13. This is what happens in Chapter 11. This is what happens in Chapter 13. Because
but I think the key to keep in mind here is this is what this is the start of a consultation.
Oh yeah.
Right. You'd sit down with a bankruptcy attorney, and the bankruptcy attorney would say, okay, tell me what's going on, right? And they're going to ask you some really hard questions, with the expectation that you're very frank about what's going on and what your situation looks like.
My name's John, but I'll be frank with you.
I love it.
All day. I'm here until Thursday.
Surely you're joking.
Try the veal.
So we're gonna ask you some questions, and then you're gonna tell me what's going on, and then we're gonna lay out the options, right? We're gonna lay out the options to figure out which one of these options, if any, is the best one for you. And to John's point, you're gonna be able to ask all your questions. How is it going to affect my ability to get a loan down the road? Is my house up for grabs? What am I allowed to keep? What am I allowed to not keep? Do they treat my business differently than they treat my personal assets? The bankruptcy consultation, which you're probably going to have to pay for, but it's probably worth it so that you can walk away from that and make very informed decisions.
Well, the other thing is what I would always advise people is like, don't have that conversation,
yes.
But then you may want to have some other conversations based on what you learn.
Correct.
Right? You may want to have some other conversations with, say, your tax attorney or the person who does your taxes. You may have your estate planning attorney. You may have a financial planner. You may have these other people that you work with. Just because the bankruptcy attorney says, "Hey, yeah, don't worry about it. You won't have to worry. You'll be able to get a loan in 5 years." But right. You may say, "Oh, that sounds great. That's not that long." But then you may talk to your CPA, and they may say, wait a minute, don't you have a kid who's going to college in
Right.
2 years? How is that happening, right? And so, because one of the things that we see a lot in our practice is, if you come across somebody who's got a lot of debt, like oftentimes like consumer debt, like credit card debt, and they're like, yeah, I don't know, I'm just not, it's a lot, and it's a lot. I mean, it's a big amount, and it's going to be very difficult to pay back. You have to really make some serious life changes to do it. But they're like, I'll just file for bankruptcy, and if I file for bankruptcy, and they think, oftentimes people think that like, and Jay mentioned this before, there's different levels of it, right? So if people say, I'm just going to file for bankruptcy, it means they can walk away from all their debt. No. That's not how it works. Because if you have X amount of dollars, you have X amount of income, you're not going to be allowed to file for a certain level of bankruptcy. They're going to say, oh, no, we'll restructure this debt, but guess what? You're paying something. You may not pay. If you owe $50,000 or $100,000, you may not pay that whole thing.
Yeah, your creditors may have something to say about that. Your creditors might say, I'm not sure leaving us out in the cold like this is the way to go, and we think that these obligations can be managed, and we can restructure this, and we can do something different. And you also got to figure out what the goal is.
Yeah.
Like, is the goal to kind of restructure and stay as an ongoing concern and keep doing what I'm doing? Or is the goal to say, look, I'm out, I'm completely out, I'm going down a completely different path, and I'm looking to close this chapter of my life? These are all the things that the bankruptcy person that you talk to is going to want to know from you. What's the plan here? And this is where, we've talked about it on the show a million times, and John just mentioned it. This is where you want to talk to your team, right? Your team, right? Your financial people, your other lawyer that you might use, your tax person, your bankruptcy people.
I get to call the New York Giants.
I
get to call my team.
Yeah, there are some years some would argue that they should have filed for bankruptcy. It's a different animal, right?
Stop there.
But this is the part of this is, if these things have become a problem for any number of reasons, this is where you want to go with these so that you can understand all your options. These are solutions. This isn't evidence of failure. This isn't evidence things not working the right way. These are solutions, and these solutions are out there for a reason.
Yeah, I mean, it's a big deal, right?
Sure.
If you're in that, if you're having that conversation, this is, then yeah, this is and it's humbling and it's humiliating. It's like there's all, but at the end of the day, as my old man said, it's only money, right?
Yep.
So it's only money, and for whatever reason, your fault, my fault, nobody's fault, whatever reason, wherever you're here, at least now's the time you got to grab this bull by the horns and say, we're gonna solve this problem. It may take some time. It may take some, like I said, it may take some life-changing decisions.
Yeah.
It may take some restructuring of things. It may take some buckling down. But guess what? If you put your mind to it, in our experiences, we've found that people can do it. Like it can be done, and many times it's not really as bad as you think it is. It's kind of like like with anything, kind of start that 1,000-mile journey, take the first step.
Yeah, explore your options, wrap your head around it, and then let's solve the problem. And let's move on.
And don't eat the elephant in one bite, right? Yep, you got to a little bit at a time. Of course, the elephant left the room earlier.
The elephant's out of the room.
Yeah, and so Ray's not here anymore, but he's
the best.
He's dreamy.
He's the best.
He's dreamy.
Dreamy, ladies. Dreamy.
All right, so
all right, let's wrap it up.
That's it. It's time to go. All right, so thank you for joining us on Money in the Law, My FM 101.3. Jay Marsden from the Marsden Law Group. I'm John Drohan from Main Effort Financial. Stay tuned next week. We'll be here next Saturday.
We will.
Saturday. Hopefully we'll have a little chippier or a little cheerier topic to talk about.
We'll bring it up. We'll bring it up next week.
Something more fun.
Yeah.
I mean, not as fun as St. Patrick's Day, but you know what? It's whatever date it is.
Hey, we'll talk
It's
to you.
the day. Yeah.
All right, we'll bring it up.
All right. We'll see everybody
Have a great
next
week, everybody.